Hey, welcome back. So after my last video, I think I wanted to make another video on what I'm specifically looking at in this market right now. So there's a lot, because we're in October and the volatility is something to watch out for. Now is the perfect time to do what's called premium selling, which is where it depends on obviously whether or not you're a stock trader, an option trader, whatever the case may be. I personally trade options more frequently because of the the percentage return on those. However, one of the downsides with options is literally its downside. It is not a it is a actually a zero sum game. They completely fall to zero at expiry. So you can and oftentimes will lose 100% of your investment on an options play. So that is something very important to watch out for. However, it is also important to note, if you can figure out how the option market works, then maybe you can start actually making some money there. Now, most of the time, if you're trading options, it's because you have not a relatively small account. You're going for growth. Uh, Options is obviously not a good choice for growth because of the way that it moves. For example, if something moves like a play like this on the SPY moved from this bottom to here about 3%. So that 3% could result in about 300% in an option change. So yeah, while that's fantastic, if you played the wrong side, you would have lost over 90% right here. Now, with this information, it's really important to figure out how certain stocks will behave because what makes options very complicated is that you need to know roughly the date of what you think a stock will hit. So, for example, if I think SPY is going to hit 300 at some point in time, I'm going to have to, or at least want to know the date for me to really do well with that. Because if it doesn't hit 300, so if I say next week it's going to hit 300 and it doesn't and it goes down, I'm going to lose my entire investment on that single play. So that is something to watch out for. Now, the way that I am playing this market currently is I've started to get into selling premium on options. So there are certain options that I like that are very high IV, and those are perfect because when you find that those have a crush coming up for them, so whether they turn around, like SPY turning around right here, if it were in more of a down run, there's a good example actually. I think Shopify. If you look at Shopify, Shopify is a very good thing to short as of right now because as you watch it go into this drop for some time now, and then you see that it starts to turn around, and you can kind of get an indicator of which day that it's starting to do so. This actually isn't indicating that it has turned around yet. It's still in a down run. But you can see that this volume is excessively high. You can see that this thing kind of formed a doji here. So it's having trouble around these EMAs. Like I said, don't heavily rely on what do you call it? Indicators and studies and stuff like that, but it is helpful to know kind of where you are because these do act as natural support and resistance lines anyway. So as of recently, for example, we've crossed over to this, crossed over the EMAs, so we'll catch a crossover, and then Shopify will begin its up run at some point, hopefully, not hopefully, but at some point. So that is important to figure out right there. One of the things that you want to pay attention to is the volume on these uptrends. So for example, it hasn't broken into it yet, and it hasn't really shown signs because it's higher than it was here by quite a bit, obviously. But in the longer run, we've dropped over almost $100 down here. So keeping an eye on that. I think the better thing to do, as opposed to buying options, is to sell the opposite option. So what that means is, for example, if you're going down, if it's coming down in this way, what's happening is the put prices have exceeded what they once were. Here a put for 300 was maybe, I don't know. You'd have to look at the option chain for this, but let's take a look just for kicks, right? So we're expiring October. So if you look at the 300 marks, they are, for the puts, they're at like $1. So these aren't in the money anymore because we've started on a down run, but you can actually look at what the price was by using on demand on Thinkorswim. Now, once again, that's just an idea here. Now, what happened is when these things increased in such a high level, because they were in the money at one point, which you can see things in the money for Shopify sit at puts at least sit at around $8 to $7, which because you have to buy in bulk of 100 contracts would cost about $800. You can see that once it starts turning around, the thing that was once in the money, which was the $300 position, is now not worth that even close. It lost $700 of that position over this decay. Now that right here would be if you knew, obviously, and that's part of the issue is you don't know. But if you knew that this is roughly where it turns around, what you would do is you would sell a put right there. You would sell probably, so what we would do is we would sell this 300 put, which would cost roughly around this cost. It'd be a little bit more expensive because there's more time, but it would cost roughly this, and then over the course of these next few days, it would lose a lot of that value, and that is the premium that you would collect on it, and that would be worth much more to you than if you were to buy a call and hold it to this direction. And I can show you that. I'll show it later because, like I said, these videos are primarily for my own benefit as of right now. It's so I know what I think is going to happen. So that's what this is. Yeah, Shopify would be amazing to have collected that premium on. I think you still can. I need to find a good price level to do so, but I'll figure that out later. Now, let's look at what I really wanted to pay attention to, and this is something because of the TTM, and this is the reason I am focused on the TTM squeeze on this position is because I like it. I have looked at this before in the past where I've seen that it does literally the opposite of what it takes off in its direction, but then it goes against it, which it has done. And then when it comes back into the swing of it, it seriously just climbs like crazy. And collecting, honestly, you could buy naked positions on this and make quite a bit, I think, back on this position. Now, no position is certainty, but this is a higher probability play because of history. One thing you should never do is you shouldn't trust history per se to say, hey, this is going to, increase at some amount by this date. But what you can do is you can figure out, hey, how often does this happen? And when it happens, how often does it work? Now, for me, it works very well. So I will be trusting this, I think, to some extent, and I will probably be playing this. I don't know how far because that's something I would need to figure out with time. The volume doesn't necessarily indicate the turnoff. I mean, we are slightly above average on this bigger wick day, and the EMAs look like they're about to cross over, so we might actually start catching into this position. We will definitely climb back up to the 1800 levels, so maybe I'd want to buy an 1800 call for this week. Maybe I think it would be smarter if I were to sell puts on it, because whenever you sell puts, you will make back 100% of your investment every time, assuming that it expires out of the money, and that's what you want. Now, selling naked puts is very dangerous because you get assigned, and if you're not covered, it just causes a lot of problems. So what I do is I buy spreads. So here I would buy a credit spread on the puts. Maybe if you want to buy a high volume for this, maybe you'd buy instead a debit spread call side, and you would let it climb to this area wherever you think it'll take off, and then collect on that. And that's a really good way to do a quick grow. I think I'm going to try to take as much advantage of this turnaround as I can, assuming that it does happen. There is a probability that I'm wrong. I mean, that's just how this goes. For example, if any bad news comes out, this whole play could be invalidated. It's just how that is. So watching that is very important here. Now, it's similar with SPY. SPY is doing a similar behavior. It is actually bouncing off the SMA right here, which is, again, like I said, it's an indicator. You need to pay attention to it because it does act as a support and resistance line regardless of whether or not you believe in it. To me, it does, so therefore I take it. But I don't rely on it solely, except for this TTM squeeze. I do like this. So I will be watching SPY as it climbs back up to, I think, 300. and then maybe beyond 310 is where I'm thinking. But I do anticipate that this may be its final run, the final rally for the market before we begin quite a big decline, I think. So we will see how that goes. We don't have declines like that very frequently, but it's been more than a decade since our last one, so there's no such thing as being in due time for a contraction in the market, but it's kind of around that point, I think. I think the market data, which we've seen up until this point, has also indicated a similar thing. Now, so I would say SPY calls may be the move. Maybe SPY selling its puts would be a little bit better. Like I said, because of the volatility in this market, you could purchase something, a $300 call, for example, that'll expire 2 weeks out, and you could buy it for maybe $3. That's not actually how much it's worth, I don't think. I think it's worth probably like $150, but or $1.50. So $150 worth of that contract. But then as you experience more volatility, similar to this, that will get squeezed out. You will make profits, but not nearly as much as you could if you play this a lot smarter. So that's a lot of what this is supposed to do. And you can, it's the weekend, so the best thing to look at is actually the futures, the S futures. So we can look at the flexible grid on them and see, hey, even now we're kind of going up. It makes sense, all the news, the news about the Fed rates and things like that would indicate this. It's not really a surprise at all. I really do like that one. So these are some of the plays that I have. So watching the TTM on these. One thing I really would like to talk about is OLED. So back not a long time ago, but over a year ago, when was this? Was it even? Yep. Back in December of last year, actually, OLED was sitting at around $80 per share. Now, since then, we have moved an incredible amount on this stock specifically. This stock has moved like Beyond has moved, and it's incredible to me. And to be completely fair and honest, you could have predicted this. And the reason you could have predicted this is, oh, by the way, I want you to note that, like, right here, for example, the TTM does go off, and it indicates this, but it does not work similarly really at all, right? We had it go off here. It indicated the downturn. We didn't really get that, and then it happened again here, and, I don't know what it indicated there. What did it do? Red, it comes down. It doesn't really work here. So you have to know when and when it does not work. But the reason I like OLED, I thought OLED was really interesting. OLED is down obviously a lot now, but since here it's over what 40, 70 bucks almost. But the thing that is very interesting about how this happened is because back when OLED was becoming popular, and the reason it was becoming popular is because Samsung had implemented OLED technology into their phones. Now, as the iPhone X started to come out and their sales began, Samsung, who was the sole proprietor of OLED, was selling them OLED screens, universal displays, and that was a guaranteed sale, which is very, very easy to figure out. I mean, you saw it. It was there. There was a video by Nerdwriter, who's this other YouTuber who talked about why Samsung. So if you get a chance to do this, YouTube, and this came out in 2017. So you can YouTube Nerdwriter. You can YouTube Nerdwriter. What was it? YouTube Nerdwriter. Why Samsung needs Apple. Why Apple needs Samsung. Okay, that's the correct one. So right here, you could see this run up right here into, around the time when that actually was released. This is 2016, right in this area. Once again, it's sitting around $50 per share, and it climbs all the way up to 205, and then it comes all the way back down. I didn't actually look into what caused this decline. I mean, I could kind of say, maybe the December market crash, but no, I couldn't actually, because this is the 18th. This is 2018. But this just came down for whatever reason. I don't really know why. I actually should look into that. But regardless, as Apple keeps releasing more information, as OLED technology keeps getting used in different devices, you have OLED that's growing, and OLED is a play that should have been theoretically very easy to take. I mean, you could have known, hey, even if you're just an investor, you could have taken your money and said, hey, I'm going to take, $500,000 and throw it into Shopify or not Shopify, OLED and forget about it. And that would be, the simplest thing that you could do because it it's not guaranteed. Nothing in the stock market is guaranteed by any stretch, but this was borderline guaranteed in my opinion. I mean, I hadn't have taken this position because I completely forgot about it because I was 17 at the time and I was an idiot. But back in 2017. No, I wasn't 17. I was 19. But I was too young to remember anything, honestly. But in these recent years, you can see that it's still going up because these markets are still growing. Apple is not losing customers. They're not really losing customers at all. They're continuously making new phones. One of the down trends here, which could potentially be explaining what this is, partial market decline. A lot of this actually you could definitely attribute to the trade war with China because OLED is produced in China. It is not produced in the United States. Stuff like that. You can look at how they're being affected. You can actually look at their quarterly rates. Anytime they receive an earnings, I believe they do tend to beat their earnings on this date. I think they did not this date. No, they beat it very, very strongly. I think one of the things was that got them off was guidance. The guidance from the trade war is what was causing a lot of issues at the time. But regardless, OLED was a great play, and people tend to miss these types of plays. They're easy to forget about, but they're great. They are fantastic plays and positions, just longer term investments. I do want to also really quickly cover if you're not a kid, if you actually have a 401k and you have quite a bit of money stored away into certain things, and you have the ability to take it out of your 401k, if you can take it out of anything you're in. You're probably in a Vanguard or FizRocks if you invest with Fidelity. Position into investments like that. I would around this time of market volatility, I highly recommend, as everyone is starting to see, that you take that money out and you put it into a treasury bond. And that's what everyone does during the time of market uncertainty, and that's what you can see with the TLT. The TLT is the 20-year treasuries done by Barclays, and what they indicate is the liquidity of those 20. They're purely 20 years, and they indicate the pricing and how much people are going into these 20-year treasury bonds. And so you can see these are the TLT is very interesting because you get a lot of market understanding from this if you watch it for long enough. I think I'll go into it a little bit more deeply later. For now, I won't talk about it way too much. But yeah, just these types of positions are much smarter to take, especially in times of market uncertainty, especially when there's hundreds of thousands of dollars sitting in those accounts. It's not necessarily super wise to have them all cut out like that. So keep that in mind. Now, some of the other plays, one of the positions that I am kind of starting to take an interest in is BA, because BA had taken a massive tank, as I think a lot of people know. Boeing had taken a lot of damage and heat from the 737 MAX when they had had planes crashing in. I think they happened twice in two different countries, and that had taken it out. The reason was because of a software solution that they had given. They had moved an engine. If you care, you can skip this if you want. Skip like 10 seconds forward. But what they had done is they had moved the location of an engine relative to the wing. But when they had done so, they noticed that the way the plane would fly is that it would start kind of tilting upwards, which if you tilt a plane up too far, I think many people would know, it starts to stall. And stalling is obviously not a good thing. So what they did was they created a software that would force the plane nose down when that starts to happen. However, what ended up happening on those two planes, on the 737 MAX crashes, is the software had not gone it glitched out in the sense that it didn't do the thing that it was supposed to do properly, and it kept pushing the plane down, and the captains were just trying to disable it altogether, and it wouldn't let them. And as a result, those planes came down. So they had removed these. They took the 737 Maxes out of the commission for a while. Airbus has been doing well because of that, actually. And now I think there's some more stuff going on with the FAA, but they're almost set. So that is something to very much keep an eye on. I think BA will be taking off soon again, not in a pun intended way, but they will be taking off very soon at some point. So keep an eye on BA. Not necessarily take any type of play yet. Maybe do a premium sell on the put side, but that's it. Now another play I want to get into is Facebook. Facebook is very interesting. Facebook moved, I think, I want to say how much, moved, what, 4% of the last, over one day it moved really, really heavily. It moved, oh God, I'm trying to remember what happened. But either way, it moved it very strongly with very little downside on this day, on the 3rd, which is a Thursday. And then on Friday, it continued that trend while it got rejected by this EMA here. Rejected, it's just consolidating near it. It's not rejected. But what I'm doing on this is I am selling premium on the calls. So I needed to go to 177 in order for me to start making, actually 178.77 is what I need in order to make money. And if I win that, it's like $160 that I put in. It's $160 that I will get back. And that's the kind of play, because after these huge moves like that, it's, you know, pretty easy to play them back downwards. So that is probably what I will be doing with that play. And then what else do I have? I have Apple. And Apple, oh my goodness, I think they had recently, with the iPhone 11 coming out, they had really kind of rocketed from this absolute low to here. They had moved over 6%, almost 6%, and that move is very high. Now, one of the things that kind of, you know, concerns me about taking like a premium play against the calls here would be this EMA support that it has going on. So would I want to sell the premium here? Yeah, that would technically get me the best pricing. So if I took a call that was very expensive at that point, I could sell it and let it come back down here. I could probably sell it for that $5 and, you know, cut my wins there, but it could keep going, and that's something to consider as well. Now, you know, the TLT I mentioned, gold is coming up with, you know, everything that's going on with the market thus far. You know, you can see it right here. After, what date is this? This is May. From May, it's come up about 16%. So, watching why this is happening, you know, there's a bunch of reasons. It's weighting against the U.S. Dollar and things like that because of all the information that's going on with China. So these are all, you know, important, but not important enough for me to really discuss right now. But, you know, these are the few things that I'm really looking at right now. This video is for my benefit, like I said. It's so I remember to take them. I will obviously make a video about whether or not they worked out or didn't work out in the future. All right, thank you. You don't have to do anything again because this is just a fucking video.